Hey everyone, welcome back to Upside Down Data. Today I want to do something a little bit different. I want to do a quick roundup of 4 different assets: ALGO, HBAR, EGLD, and Link, and talk about some metrics relating to each that can tell us about what we might expect going forward. Specifically, I want to talk about the short-term upside downside potential indicator, our short-term risk indicator, and also give a sneak preview of my forecasting model for each one and what it is making of each of those assets right now. So let's go ahead and jump right in. So I'm starting off at our website, polaritydigital.io, that we've launched in collaboration with Jay over at Daily Crypto Analysis. Link to this in the description. And what I want to start off with is the short-term UDPI for these different assets. So we're just going to start here with ALGO and move through them one at a time. So with ALGO, we're here looking at the short-term UDPI. And what we can see is that kind of in more recent kind of price action through here, ALGO had a nice move up out of the lows in January, and the short-term UDPI really moved up as a result, tapping out at about a 0 here. Then as we kind of came off of that rally and moved down into this big correction, you see the short-term UDPI really reverted back down to the lows. Now, if you're not familiar with this indicator, it's a risk indicator. So higher levels mean higher risk, lower levels mean lower risk. And this is the short-term version. It's reactive to moves that play out over days to weeks. So it's really looking at a more of a short-term time horizon to make its risk estimates. And so what you see is that we've bottomed out at this point that's really acted kind of as a bottom, both back through here, kind of local lows here and here, but then also even going all the way back to March of 2020, kind of that low point as well. And we bounced off there again. And now we're potentially setting the stage for a higher low relative to here to move up. And so if I'm just looking at this, if I'm targeting an upside for the short-term UDPI of where I think it might go and kind of give us a sense of when this, more recent kind of move back up in ALGO's price, how high it could cap out on, I'd be looking at somewhere around the negative 1.6-ish range, kind of the local kind of highs in these points here, or potentially going up to around, negative 0.6, 0.7, or at kind of the higher end around 0. And so I think there's actually a decent reason to believe that this rally could keep moving forward if the market remains bullish. And if it does, those are the places I'd be looking for on the short-term UDPI to think that we might be hitting the local top of whatever rally that might be. So that's kind of the shorter-term outlook from the short-term UDPI's perspective for ALGO. Now I want to flip over to the probabilistic forecast model that I have been developing and what it thinks of ALGO. So this is a bit more macro in its focus, at least this version of it. So this is looking at 180 days into the future. If you haven't seen my videos or tweets talking about this model yet, essentially what it's doing is it's predicting the likelihood or the probability that the market will be up relative to where it is right now some number of days into the future. And so this version here is looking at 180 days into the future. And so basically this is the probability of upside 180 days in the future. Now I've done a lot of extensive back testing of this and testing of this, and it tends to be quite accurate, this model, at actually predicting which way the market will be sometime in the future. And you can just see, just looking at the background here, that does a good job. And I've shown this in previous videos also. You can see how it starts getting pessimistic on ALGO going into this all-time high. What was the all-time high? And actually at the point we got there, it was saying there's only about a 35% chance of upside 6 months from there. Ended up getting that 100% right. It ended up keeping on going down through the depths of this horrific bear market. Now, what's more interesting more recently is this reversal that the model has been putting in its probability it's placing on upside 180 days from now. And now is actually giving well above equal odds of there being upside 180 days from now. In fact, it's up at around 73% or so as I record this today. Now that is going to be a dynamic value. The model is constantly learning and constantly changing its estimate based on what it's seeing. But currently it sits at around a 73% chance for ALGO. And so really what the story that's telling me is that we had this oppressive downtrend, which the model foresaw, but now we're maybe getting to a point of transition where now maybe the worst of the bear market is going behind us. And now the model is thinking that actually a bullish disposition, at least in the next 6 months, is reasonable relative, especially compared to what we saw back here. Now, obviously that's a probability, and 73% is definitely no guarantee of anything. But what it's basically just saying is that if you had to put a probability it's better odds now of there being upside 6 months from now. And it's definitely way better than we've seen ever since back here. We're starting to see, probability more like we saw back through here, which ultimately was a lot of volatility relatively sideways before we saw the big bull market move up. Maybe that's what we're starting to see now again. This accumulation range start to kind of materialize, and maybe we'll spend time kind of chopping around, maybe just to kind of slowly move up like we did back here before maybe we can start moving back up. Time will tell, but this is giving, in my opinion, this is what the model's saying, that there's hope now. There wasn't a lot of hope from the model's perspective all the way through here. Now it's saying that there's hope. There's hope that maybe things might be turning around. Okay, so let's go ahead now and flip to the next asset I wanted to talk about, and that is HBAR, Hedera hash graph. So HBAR is telling an interesting story here on a short-term UDPI also. We can see that recently it really went on this crazy run, going up through here. There's a lot of excitement with HBAR, very high transactions per second happening on the network now. And so that led to this big move up in price, and then the short-term UDPI actually tapped out at around 1.87, and we had one more kind of run up a bit more before we came back down, and that's where the short-term UDPI really cooled off, going down all the way to about negative 4.8. And so now we've actually started to move back to the upside in the short-term UDPI, as price has slowly started to grind back up. Now again, if I'm looking for upside targets in the short-term UDPI, if the market remains bullish and allows this to form a higher low and then move back to the upside, I'd again first be looking at around the negative 1.3 level as possible kind of upside target on the short-term UDPI. If we can clear beyond that, it's possible we could go and start playing with 0.6 level, 0.5 level, and maybe even actually going back up to the 1.8 if we get a really strong impulse to the upside. So time will tell, but those are some targets I'm looking for. I think there's plenty of room to run for algo in the short term if the market allows it. And then those are just 3 different levels that I'm personally going to be watching of where we might meet some resistance. So that's my overall valuation. Plenty of upside to go. Going to have to wait and see if that materializes and how high it can go based on broader market conditions. And so if we go ahead here and flip back over to the probabilistic forecast model for HBAR, we can see that it is actually getting quite bullish on HBAR here in the next 180 days, in the next 6 months. It is ascribing a probability of over 80% that the market is up for HBAR relative to where it is right now. And again, we really haven't seen those kind of readings since all the way back here. Now again, back here, that didn't mean that we went off to all-time highs immediately, right? And again, this is a forward-looking model. It's not saying this is going to happen tomorrow. And we did have, a decent accumulation zone that happened last time we saw these kind of probabilities. But then that was ultimately all pre-staging or basically kind of forecasting or foreseeing this massive move that we ended up seeing all the way through here. And then, of course, the model foresaw the bear market, just like it did for algo, getting really bearish through this whole time, which was prescient. It absolutely called that 100% correctly. And then now we're getting back into bullish territory. It kind of started getting bullish around here, and rightly so, because indeed, if we look here relative to here, the market was up. And especially as we got down through here, the market is now up versus where it was down here. So the market, the model has done a good job of navigating this so far. And so now it's giving this very hopeful sign for the future. And again, that's just kind of like I was saying for algo, the idea being, and just a little bit more so here for HBAR, that if you're going to put a probability on it, being bullish is probably better, better odds than being bearish from here. Not saying it's guaranteed, obviously 80% is not guaranteed by any means, or 100%, but it's certainly much better odds than we had all the way down through here, where it was down at 10%, 20%, 30%, etc. Much rather be at 80 than at 30. And so I think it's very reasonable that if we don't get, rug pulled by the rest of the market, if we don't have a stock market collapse, all those things that are always looming over our heads in the current climate, that, it's very plausible that we put in a kind of a behavior like this before setting in a more notable move later on in the future. So that's what I'm seeing with HBAR right now. All right, let's flip over to EGLD, Multiverse X. What has it been doing on its short-term UDPI? Well, we can see that it kind of rebounded off of the lows at about negative 4.35, which is close to, the bottom back here in March of 2020. And we rebounded back up in this move that we had done more recently, just to zoom in on the price action. We kind of moved up, short-term UDPI gotten kind of elevated here, cooled off a bit, allowed for another move up, which wasn't able to get as high there again. And then now we've kind of cooled back down to a bottom of negative 3.8. And now we're moving back to the upside. And so again, if I'm just looking at potential upside targets, if I see the short-term UDPI start getting back to these kind of levels that we're at here, negative 1.75 or negative around 1, that might be some upside targets I'll be looking at. Because you can see how around negative 1 or a little bit below it has acted as resistance multiple times during this bear market that we've been in. And so I see that as being kind of the first place we'd see as being reasonable. But then if things get more bullish for EGLD, I would actually start seeing things in the 1 to 1.3, this kind of general range as being the next target. If you can break above this, I'd see upside above that. And who knows, that might allow price action to start moving up to these prior kind of support ranges down at these levels here, at around $130, $140, turn that hopefully, maybe be able to go and turn that into resistance if we get back up there. But if it's really bullish price action, we might actually be able to break through that. But again, that's all going to be based on what the short-term UDPI is doing. In my kind of analysis based on the short-term UDPI of what seems more reasonable. So first target are these levels down here. Second target would be these levels here. And again, we're not at those yet. And so again, I still think there's a decent amount of EGLD room for it to run if the market remains bullish enough to allow it to do so. So if we then flip over to the probabilistic forecast model and just go over to the chart for EGLD, what we're seeing is similar to what we're seeing with ALGO and HBAR. Again, a change in paradigm, a change in outlook, where throughout the entire bear market, or even leading into the bear market through here, the outlook was pessimistic, bearish, not much sign or reason for hope through this whole time. But now we're seeing this start to reverse. Finally, we're seeing a break, a decisive break above that break-even point, that 50-50 chance of upside in 180 days. We're now at about 75% chance of upside for EGLD 180 days from now, 6 months from now. So again, no guarantees, but it's suggesting that we might be breaking out of this oppressive downtrend, this oppressive down-only regime we've been in throughout this whole bear market, and maybe starting to get back into something like this, where we might put in some accumulation. Doesn't mean that downside isn't possible, that we might be seeing a changing in sentiment, a changing in paradigm that could lead to a big move up. So the model is currently saying 75% chance of upside, interestingly, right, kind of like it was back here before we saw this big explosive move to the upside. And so kind of looking forward, then forecasting forward, a bullish outlook seems reasonable for EGLD as well. Okay, so then finally to talk about Link. Now, Link is an asset that I think a lot of people have been getting quite disappointed in or quite upset with. And the reason for it is because it's basically been doing nothing for almost a year. It's just been basically stuck in a tight range for an entire year. And you can see that the short-term UDPI for Link has kind of been reflecting that generally speaking, when you get up to around, whatever this level is here, at around -1 or so up here, or, if you really get some bigger explosive moves, getting up towards about 0.5, a bit above 0, but more or less kind of hitting resistance every single time, moving back down, finding support at these lower levels again at around -3.4 or so, and then bouncing off that again. We've been seeing this over and over and over. Now, a lot of people have been disappointed in this because, it's boring. Nothing's happening. A lot of people are saying, Link, wake up, do something. But one thing I will mention about Link that's notable is that sideways price action has actually been outperforming a lot of other altcoins. So not to pick on, EGLD or ALGO or HBAR, but for all of these, relative to what was happening back in the summer of 2022, they went in and put new lows relative to those points. See that in every single chart relative to what's happening back in the summer. You look at Link, what was going on in the summer, here it is again. It didn't put in a new low. And so that actually is relative outperformance, even though it's been going sideways. So even though on its own it looks very disappointing, it's actually been holding up relatively well relative to other altcoins in the space. So it doesn't mean that it has to break out of this range immediately, but one thing that's possible is that there's some kind of relative strength, a lot of changing of hands. Maybe, the sellers might eventually get exhausted, and then that could then lead to demand ultimately helping it to break out of this range to the upside. Maybe something sort of like we saw here. It wasn't as much of a sideways range back here, but it was still not a whole lot of, anything too exciting through this whole time. And then off to the races we went, this massive bull run we saw for Link. Possible you see that again. So if I'm looking at the short-term UDPI, I'm looking at these same levels of resistance again. as being possible upside targets, which again, we're still below them. So upside in the short term here is still quite plausible in my estimation. But then if we can break above these levels, maybe then we can start retesting, the short-term UDPI can make it back up to, 1.5, back up to above 2, 2.5, etc., to put in maybe what would ultimately be that breakout of the range. So we'll have to wait and see if that's possible. And again, that's all conditional on the market remaining bullish long enough for that to happen, that we don't see, a complete collapse in the stock market, things like that, which, you never can know what's going to happen with that. There's no guarantees ever. But assuming those things don't happen, that's what I'd be looking at in the shorter term. And then if we just flip over to the probabilistic forecast model, the other reason why I'm leaning on the side of I think that it's more likely than not this range breaks to the upside than the downside is that the forecast model is now flipping bullish on Link as well. We're up at around just below 80% probability of upside in 6 months from now. And so that, to me, suggests that some upside here is plausible going forward. Now, again, as I've said with the other assets, this is a dynamic forecast, and so this could totally change based on if things start to change in the market. If it sniffs weakness, if it thinks that things no longer look bullish, it will change its forecast. But it, generally speaking, has been quite accurate, and I've written an article about this. I've talked about this in videos and tweets. It tends to be quite accurate in its predictions, or impressively so. And certainly, it got this whole bear market 100% right for Link. Now it's flipping bullish. So, 80% is no guarantee. That's not 100%. But again, if you're going to put a probability on it, being bullish in here is a better probability than being bearish. If you're going to be putting a probability on upside, it's probably better to be assuming that upside is more likely than downside in the next 6 months. So we'll have to wait and see. But again, it could just be something that looks more like this, kind of an accumulation before maybe some more bullish movement. But again, I'd argue we've already been in a lot of accumulation, and so it's not infeasible to me that Link might eventually gear up for some move to the upside. Now, there might be some narrative things that have to happen first, like maybe DeFi really needs to kind of pick up in terms of its narrative, or maybe some big new development needs to happen there, because Link, is a thing that's very heavily connected to DeFi. I think it would do very well if another DeFi narrative takes hold. We'll have to wait and see, but certainly the model is leaning more bullish than bearish. So to kind of wrap us up then across the space, what I'm seeing there is that in some ways it's not surprising to me that the model is getting more bullish on those different assets at the same time, because the crypto market moves together, generally speaking. There will be differences where certain sectors will run at different times and things like that, but there is a lot of correlation that happens. And so it's not surprising that as the model gets more bullish on ALGO, it's also getting more bullish on HBAR, etc. But the broader picture that I'm seeing across all these different assets is a change in narrative. And I've been talking about this ever since even December of last year and going into the beginning of this year, that the worst of the bear market, there are signs that might be behind us. And even if new lows have to happen, it seems less and less likely that we're going to get as much horrific pain like we saw through the bear market in 2022. And certainly when we look at the probabilistic forecast model, it actually thinks that now is the time to maybe be thinking that upside is more plausible or more likely in 6 months time from now than not, which was not the case at all throughout all of 2022. It was hyper bearish the entire time, and it was doing that in real time. That's not just a hindsight thing. It got bearish on the market all the way back in the summer of 2021. It was saying, all right, upside's possible here. But then as that upside came in, it was saying, all right, that's it. We're probably not going to see much more upside. Indeed, it got 100% right. It called that bear market in real time. I think anyone who went through that bear market very much would have liked to have that information at the time. One of the reasons I'm so excited about this probabilistic forecast model is it's able to sniff these things out when it goes against common intuition, where at the time everyone was calling for massive new all-time highs across the market. Everyone got that wrong. Or not everyone, but most people got that wrong, and we went into that horrible bear market. Probabilistic forecast model saw that coming from a mile away. All right, so if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. A lot of updates about indicators and more over there. Also check out claritydigital.io. Now, of course, nothing I've been talking about here is intended to be financial advice. You should take these data as you see best fit and make your own decisions. But what I'm seeing is some signs for hope.